I want to once again congratulate you on becoming a speech language pathologist, earning master degree, graduate, postgraduate, and all the good stuff. And now that you got a job and you put a few dollars away, now it's time, or I'm sure this thought crossed your mind that buying a house wouldn't be a bad idea. Now they have the high school degree, the bachelor and master degree. What do you think you should start with?
Well, first I'd find a house that I would like,
Right,
and then I would call you.
right. It's an honor.
And then I'm not really sure about all the specifics or in-betweens.
That's a good idea, and it's encouraging me to learn that this idea did cross your mind. Not only that you keep me busy in the industry, but also you're going to be buying a house. Good. But anyways, where do we start? Right. I mean, you like the house, you found the home, and now what? Can you afford it?
Right.
Right. So I think you should start, and everybody should start from actually looking into financial options and understanding and determining how much you can afford rather than going out looking for homes or even not even going out or spending time on Zillow or on other online resources to find a home. Just to learn that this what you like is that's something that you can't afford. So the next step, all right, so you met with a mortgage broker. What do you think you need to bring in for the mortgage broker to understand your financial strength and what you can afford?
Well, your pay stubs?
Okay.
Not too sure about the rest.
Right. So to give you a rough idea, the mortgage consists of three major factors that are determining your eligibility. The credit, how good or how much it's lacking the requirements, the income, and the money for the down payment. Let's quickly go into down payment. What do you think the minimum down payment is?
Maybe 25% of
25%.
how much the cost of the house is?
Right, so the 25%. No, the minimum down payment is actually 3%, especially for somebody who's a first time home buyer. Of course, there are details, but the minimum down payment is 3% if you're purchasing a single family home or a condominium. If it's a multi-family home, and some people want to start as buying a multi-family because the opportunities out there and the other units in the house help you pay your mortgage and accumulate wealth and build equity and all that good stuff. And also help you qualify for a larger loan amount. So some people start with multifamily. Of course, it comes with perks. Are you ready to be a landlord? Do you want to be a landlord? This is a subject of another discussion, but right now let's talk about basics that, in my opinion, should be taught in school, at least the basics. All right, so the minimum down payment starts from 3%. All right, so fine. We talked about assets and all the good stuff. If you're a first-time home buyer, all the money can be gifted to you. If you're not a first-time home buyer and you're not purchasing a primary residence, but we're only discussing primary residence right now. There are other type of financing, but let's talk about bare minimum, something that I wish you learned in school. All right. So the minimum down payment for primary residence home for single-family home and a condominium is 3%. Now, money towards the down payment and a closing cost. By the way, you heard of this term, closing cost?
No.
Closing cost is cost associated with purchasing a home and obtaining a mortgage.
Okay.
It varies from state to state. To give you an idea, state of New York and city of New York charges almost, actually a little bit more than 2% in mortgage tax, which doesn't exist in most of the states in the United States. For instance, closing cost here in New York would cost you almost double or at least 2% more than what it is in New Jersey, right? And it's right here, almost in our backyard, or what New Jersey want to think that New York is on their backyard. But the reality is they are not in their backyard, but this is not what we're discussing. So the closing costs in New York are quite more expensive here than it is in New Jersey. Do you need to have all the money in your account, let's say the 3% plus whatever the money that you need to pay for the closing cost? Does it have to be your own funds?
No.
When you're a first-time home buyer?
No.
That's good, but do you know or you guessing?
I'm guessing.
All right, good. It's a good guess. Yes, money can be gifted to you both by your relatives can give you a gift towards the closing cost and a down payment. We briefly touched the assets, and I'm going to have a separate session where I'm going to break it all down and make it a little bit more boring than I hope. We're not going into this right now. Income. What is your knowledge? You need to demonstrate your ability to repay, right?
Right.
So everybody that borrows the money to purchase a home need to demonstrate ability to repay, right? What stands behind it is a set of thousands and thousands of different guidelines depending on the type of the transaction, depending on the credit score, depending on the type of property you're buying, and all the good stuff. But before we jump into income and what do you think you should provide to a mortgage broker to determine ability to repay, is do you know what consider a first-time home buyer?
Someone
Who's
who's
buying it for the first
yeah.
time, right? No. Well, it's part of it is true. Yes, somebody who never owned the real estate before considered a
Right.
first-time home buyer. But a definition of first-time home buyer is somebody who hasn't had interest in the real property in most recent 3 years.
Okay.
So that's considered as somebody who's a first-time home buyer. For instance, you own a home 3 years ago, you sold it, 37 month, put you in a category of the first-time home buyer. Do you think your ChatGPT knows this answer, or will you even think of asking
I
how to
probably would
consider?
not
I'm sure.
ask.
I'm sure ChatGPT does know the answer, but the question is, there's so much conflicting information that machines provide that there's a reason to look for help and advice of professional. Now, income. What do you think you need to demonstrate your ability to repay? What do you think you need to provide to the mortgage broker to determine your ability?
Payments that you make?
Payments that you make, that would be part of what? Income or another category? Remember, assets, money in the bank, right? Money towards the
Yes.
transaction,
I-
credit,
Yes.
and income.
And
We are looking at
Income?
right? What do you think income
How
is?
much you make?
How much you earn,
Yeah.
right? So your earnings. Normally, it's the most recent 1 month pay stubs, W-2s for most recent 2 years. Now we're going into different categories versus somebody who's self-employed who owns the business. We need to review the income tax. If somebody, let's say, owns other properties, then we need to review personal income tax. If it's a business, then we need both business and personal income tax. Somebody who's sole proprietor normally reports their tax in Schedule C. But again, this conversation is for next episode where I sit down with the CPA and explain all those basic things so kids your age and even young adults or a little bit older adults can kind of relate, all right? Because again, I'm doing it for 23 years and I realize almost every day that 80% of people just don't know those basics. It's not their fault. It should be taught in school, all right? But anyways, let's not bash the Department of Education. I'm sure they're doing a great job bringing it to this level. I mean, somehow you manage to get your master's degree. I guess it's not all that bad. But everyday life is what I'd like to address here. All right, so you produced 2 years of W-2s and pay stubs for current year, most recent pay stub, right? So that's good enough to determine your ability to repay. But what are we going to do with you? You haven't been working for 2 years. As a matter of fact, you haven't been working even for a year. Can you buy a home? What do you think?
No.
Why not?
Because I'm not showing that I can make consistent payments yet.
But you do have a full-time job. We could see how much you make.
I have to earn their trust.
Well, obviously, but we don't discriminate on that. You don't have to
Okay.
prove anything. You don't have to prove your individual qualities to qualify for a mortgage. You're clearly not employed for 2 years, but you are already 1 month into it, right? Into
Right.
your employment. So you do have a full-time job.
Right.
You have a contract, right? That shows that you're going to be employed for at least, probability of your employment will last at least 3 years.
Okay.
But what are we going to do with your past experience? You clearly don't have 2 years. Do you still think you got a mortgage?
Yes.
Why?
Because someone else can co-sign for you.
Right, but you don't have. Yes, cosigner is a good thing. All right, that's great. But again, let's go back to, hey, you need 2 years of employment and you need to be currently employed, making steady income, and you need to demonstrate probability of continuity of your employment for at least 3 years, right? The
Yes.
probability. Okay, so you don't have 2 years. So you probably what? You would think that you have no chance.
Probably less of a chance.
Less of a chance. In your case, when somebody's not employed, cannot demonstrate or hasn't been employed for most recent 2 years, but graduated college that landed a job, a years in college considered as employment history. So we could use the years that you spent in college and you at least 30 days of employment could be considered as a steady employment and you will qualify for the mortgage provider. Again, that something else comes in play and we'll talk about it later. All right, now we'll talk about credit and importance of it. What do you think is considered good credit?
Anything above 700?
Everything above 700. You know what? It's a good call. Yeah. And there are plenty of information on the internet where you can easily find that question. But what happens if your credit score is less than perfect? What do you think the minimum credit score that you could qualify for the mortgage?
Maybe a little bit under
A little
good.
bit under 700?
Yeah,
Like what, 699?
680.
Okay, 680 is decent. All right. So the conventional, the mortgages are broken down into more than three categories. But since we talk about basics, let's talk about the most popular products. There are two main categories of mortgages for primary residence, especially for primary residence, since we're talking about your first home, right? So it's conventional, which is subsidized by the government, and FHA, which is insured by the government. There are differences in them, but for conventional mortgage, minimum credit score is 620. For the FHA, it goes below, and I hear some lenders to even down to 500. But is it a good thing to have a credit score between 700 and below
Probably
700?
not.
Well, different situations in life, it could be honest mistake, something missed something, especially I see it a lot with new credit cards. You got yourself a new credit card and, charged it or maybe even not. No, the better example is different. I'm noticing that more and more credit cards now have annual fees. You get your new credit card, you get excited. Maybe there was a first 6 month zero balance or some kind of specially right. Well, stores normally don't charge that. So you got yourself a new credit card. The annual fees waived for the first year. Good stuff. You're using it all the time, or maybe you stopped using it. You used it for some kind of, I don't know, maybe it was a travel promotion or store promotion or whatever it is. So you used that for that 2 3 month, paid it off, and forgot existence of this credit card. And then comes 12 month, and all of a sudden you get yourself 39,
Yeah.
49, whatever that annual fee is, especially for younger generation. You guys need to build a credit history, right? So how do you do it? You take more aggressive credit cards from more aggressive lenders that offer lower balances, to start with. They charge annual fees, large annual fees, origination fees to open the credit card. Maybe sometimes you need to even deposit your own money. But where I'm going with this, comes the 12th month, the fee is due. You forgot that this card existed because there's been enough time for you to build better credit history on this credit card. You got yourself a newer credit card that is, less in percentage, higher limit, and all the good stuff. Comes the year, you didn't realize you had it. When you open this credit card, you selected paperless billing. It came to your email box together with millions of other emails that are promotional and buy this, we'll give you that, and all the good stuff. So you deleted it altogether without realizing because you're not using the card.
Yeah.
So you deleted it, right? And you hit with late payment, and all of a sudden your beautiful 760 credit score become 640. Have I seen it? Oh my God, especially when it's a fresh. You call the bank, you plead to them, you apologize, you ask them for all the supervisor out there, and nothing happens. This late payment stays because for a number of reasons. These are the people that this is like, yes, I understand. You need to be careful. You need to know your finances. This is where I'm going. Is this excusable? Absolutely, everything is. After all, we're human. But where I'm going with this, please pay attention to your credit cards. Know your bills. Know how much you can afford, and without stretching. But we'll talk in details about this one in the following episode with financial planner, with other people that I'm looking to invite into my series of those educational videos. So your credit score is 700. So what do you think? The better the score, the lesser,
Payment.
right? Why your payments are less?
You get
Better rate.
better rate. Yes.
Correct. So you get better rate. Absolutely. So the importance of good credit score and good credit report is very important. But I want to share a small tip, and maybe it will help your friends and other people of your age. How do you build your credit without having any history? Ask the relatives, parents to add you to their credit card with their history, preferably without large balances and without late payments. Add you as an authorized user. So whatever history this card has will help you build the credit. Once you get a couple of those cards, you'll get your score, you get your credit history. As an advice, ask your parents, ask your relatives to add you to their credit cards as an authorized user. All right. Once you build your 2 3 6 months later, you establish your own credit history. and credit reporting based on those cards. Apply for your own, but don't just jump and grab everything that looking at you,
Right.
because you're going to be bombarded with offers for all the credit cards. Take 2 or 3, give it a rest, give it another 6 months, then get rid of those authorized users. Just cancel those authorized users, and please be careful with your credit, because it's very important. Because the credit is one of the determination of the risk. The mortgage is the risk measuring. So the better your financial situation is, the lower your debt to income ratio, the better your chance A, getting a mortgage, B, getting the best deal out there. So the importance of credit, paying on time, make notes, set calendar reminders, just don't miss the payment. Pay minimum payment, but it has to be done. We covered money in the bank, we covered income, we covered the credit. All 3 are most important. There's nothing more important than those 3 to understand whether or not you qualify to get a mortgage. Now, to summarize our conversation, I don't want to go into more details. I think there's more than enough for basic. I hope you and everybody else learned more than they knew 15 minutes ago of the basics of the mortgage. So let's summarize everything that we talked about. So the first-time home buyer is somebody who hasn't owned the real estate in the most recent 3 years, or buying it for the first time. Minimum down payment for a primary residence for a single family home and a condominium is 3%, and the credit score is important.
Yes.
All right, very good. So let's wrap it up with today's session. We'll see you next time. Thank you.